It's time for the midweek check-in here on Stonkcast. The US and China got a deal done. We had CPI print on Wednesday, and also was Apple getting behind in the AI game. We'll break that all down and much more. Stick around till the end. I'll lay out the key economic data you need to be paying attention to the remainder of the week, and we got a special announcement here on Stonkcast as well. Don't forget to like, subscribe, and follow wherever you listen to podcasts. Now, let's get into it. Welcome back to Stonkcast, the market show for the average Joe. Whether you're a diamond-handed degenerate looking for the next 500% play or a more conservative swing trader or investor, we've got you covered. We tackle the latest market news, give our 2 cents, and maybe, just maybe, help you make some money along the way. I'm your host, as always, Brandon Shar. Welcome back. We got a jam-packed midweek check-in, so let's hop right in. Let's do a quick look here at the overall market, see where we're at. We got the heat map here for the S&P 500, and really a mixed bag. AVGO was green on Wednesday, up 3.38%. Apple was down. We'll get into that. Nvidia down. Google, Meta, some of the bigger names in the tech space were down. Let's do a quick check-in on the S&P 500. So the S&P 500 ended Wednesday down almost 0.3%. You got the NASDAQ down almost 0.4%. Really, the only thing that was green on Wednesday, you got the energy sector that was up 1.45%, and a little bit of green out of industrials, utilities. That's about it, really. The VIX also peaked up a little bit on Wednesday, finishing at 17.26, up 1.83%. So taking a look at the S&P 500, if we just break this down on an hourly time frame, basically we started off Wednesday pretty strong, nice open, closing in on that 6,100 level and also closing in on a new all-time high. And then about midday it started to drift off, and then really around 2 p.m. we had a big red candle to the downside, and the rest of the market obviously followed suit there. We had our first red day in a while on the S&P, and really I think we were due for a bit of a pullback. I mean, it makes sense. We had 3 green days in a row. Really, we've just been on a tear since that April low that we had, and so, it makes sense. But again, the all-time high is 61.47. We're currently sitting at 6,022, so really not that far off, which is just insane. Quick check-in on the VIX. The VIX has been selling off really since May 23rd, when we had a peak up to 25. It got as low as 16 the other day and saw a little bit of an uptick on that. Seems to be holding this level right here at 17, as it did close just above that today. So that's where we're sitting at on the VIX and the overall market. So we had some red on Wednesday. We'll see what Thursday brings, as well as Friday. This from Yahoo Finance. Stock market today: Dow, S&P 500, NASDAQ futures slid amid murky signals on Trump's trade policy. So U.S. stock futures slipped as Wall Street assessed President Trump's evolving trade policy, as well as softening inflation, which we'll get to as well. On Wednesday, Trump said that he would send letters to trading partners within a week or two, settling unilateral tariff rates. So basically, at least according to this article, the markets are a bit murky right now, in part because, we don't really know what's going to happen as far as, the tariffs, kind of where those are going to settle, and we'll get into some of that here in a minute. But overall, I mean, we're still looking good in my opinion. We're still, pretty bullish. And we'll see what the rest of the week looks like. Now, I found this interesting piece here from Stock Talk on X. President Trump: every U.S. citizen born between December 31st, 2024 and January 1st, 2029 will receive a one-time $1,000 contribution from the U.S. government in a tax-deferred account that will track the stock market. So this is very interesting. This is going to be part, I believe, of the big, beautiful tax bill, as Trump calls it. If it is able to get passed, this would be part of it, I believe. It really doesn't give me any reason to be bearish on the overall market for the foreseeable future. This would be massive if this gets put through. Just to kind of put this in context, basically, if you look at those dates, right, between December 31st, 2024, January 1st, 2029, every single person born is getting $1,000. That would be a massive inflow for the overall market. Just to put that in perspective, I asked ChatGPT, there's about 9,800 babies born each and every single day in the US. 9,800. And so if you multiply that by 1,000, that is $9.8 million that would be getting pushed into the market every single day. Now, obviously, the US stock market is, valued at trillions of dollars. But still, the fact that you would be having that pushed into the market every single day seems pretty significant to me. So just a little side piece there that I found that, thought was kind of interesting. So now let's get into some meat and potatoes here. The U.S. and China, according to Reuters, deal to get U.S.-China trade truce back on track is done, Trump says. So President Donald Trump on Wednesday said he was very happy with the trade deal that restored a fragile truce in the U.S.-China trade war, a day after negotiators from Washington and Beijing agreed on a framework covering tariff rates. The deal also removes Chinese export restrictions on rare earth minerals and allows Chinese students access to U.S. universities. So if you recall, we, basically had the Geneva meeting between both parties, the U.S. and China, and then shortly after that, things kind of erupted, right? Trump accused China of not following the plan, not sticking to what they said they were going to do, and things got a little tense there for a moment. And part of the restrictions that President Trump laid out was that, hey, look, we're not going to allow, foreign students to come over here, use our universities. And so basically, as part of this deal, part of this truce between the U.S. and China, he's essentially allowing Chinese students access to U.S. universities, and we are getting access to rare earth minerals, which is a pretty big deal. We made a great deal with China, Trump said. We are very happy with it. He also said we have everything we need, and we are going to do very well with it, and hopefully they are too. Earlier, Trump used a social media platform to offer some of the first details to emerge from 2 days of marathon talks in London that had, in the words of U.S. Commerce Secretary Howard Lutnick, put, quote, meat on the bones of an agreement reached last month in Geneva to ease bilateral retaliatory tariffs that had reached crushing triple-digit levels. So that's a good thing. So just keep in mind, right, this is a temporary solution. This is not a long-term trade deal. This is in part of the 90-day pause between the U.S. and China, but it's still a big deal. The White House official said the 55% tariffs imposed on China represents the sum of a baseline 10% reciprocal tariff Trump has imposed on goods imported from nearly all U.S. trading partners, 20% on all Chinese imports because of punitive measures Trump has imposed on China, Mexico, and Canada associated with this accusation that the three facilitate the flow of the opioid fentanyl into the U.S. and pre-existing 25% levies on imports from China that were put in place during Trump's first term in the White House. So basically, we're looking at a 55% tariff, which is kind of interesting. I think a lot of people thought it was going to be 10, even after this deal got done, and that's not the case. So U.S. tariffs will be set at 55%, China's at 10%. So that's basically where we are at right now. The framework for the deal. So officials from the two superpowers had gathered at a rush meeting in London starting on Monday. The meeting followed a call last week between Trump and Chinese leader Xi Jinping that broke a standoff that flared just weeks after the preliminary deal reached in Geneva, as I was saying. So everything seems like it's going pretty good. I mean, this is great news really for both parties that they were able to get something done here. Taking a look at China's grip on rare earth minerals. This is very interesting. I didn't realize this. China dominates the global rare earth sector, holding nearly half of the world's reserves and controlling the majority of mining and refining capacity. So if you take a look here, basically China, when it comes to reserves for all rare earths, they have 48%, while the rest of the world has 52%. So they control nearly half, which is just insane. When it comes to mine production, 69% for China, refined production, 87%. Refined production for rare earth magnets, they control 91%. And then refined production for heavy rare earths, 99%. So pretty significant. So basically, they had not been dealing with the U.S. when it comes to rare earth minerals. So the fact that that is on the table now as part of this deal, I think is a good sign for the U.S., obviously, and it sounds like China is getting something out of it as well. So now, what about the rest of our trading partners? So this from CNBC, Besant floats extending tariff pause for countries in, quote, good faith trade talks. So as President Donald Trump's 90-day tariff pause nears its end, Treasury Secretary Scott Bessent is signaling fresh openness towards shifting the deadline. He said for any of the U.S. 18 important trading partners, they are, quote, negotiating in good faith. The Trump administration could roll the date forward to continue good faith negotiations. Bessent's remarks come after Trump said the U.S. had reached a trade deal with China without releasing specifics on the framework of the deal. So basically, from the market standpoint, it's kind of interesting, right? Because this deal came out today, and you would assume before Wednesday, right? You would assume, hey, we announced this deal between the U.S. and China, therefore the market's going to go up, but the market didn't go up. In fact, as soon as the news was official, the market began to sell off a little bit. Maybe a bit of buy the rumor, sell the news going on there. But in addition to that, you got to keep in mind that we have these other countries where we don't have a deal done yet. And so really, I think the market is looking for some certainty there. Keep in mind that 90-day tariff pause that Trump implemented that sent stocks intraday soaring to historical highs is going to be up on July 9th, and that'll be here before you know it. And so basically, what the Treasury Secretary is saying is that we are open to, playing ball, so to speak. And, those who are, as he says, in good faith, negotiating with the U.S. will be in a position to potentially extend that deadline. So we'll see what that looks like. Obviously, a lot of gray, a lot of things up in the air there, and the market doesn't like uncertainty. And so that's kind of where we stand right now. So moving on, want to take a look here at an interesting stock, one that everybody knows, and that is Apple, folks. So Apple, a couple days ago, actually on Tuesday, had their giant, conference for, basically programming and all the different, new things that are coming out. They do it every year, WWDC as it's called. And, basically everybody was looking forward to seeing what one of the largest companies in the world was going to do on the AI front. And they didn't really do a whole lot. And I think it made some investors a bit nervous. So found this article here from the Economic Times. Apple stock drops 1.5% after WWDC 2025 keynote. Did Apple's big AI reveal and Siri upgrade fail to meet investor expectations? So shares of Apple were flat before the conference, slipped 1.5% after executives took the stage on Tuesday at the company's much-anticipated Worldwide Developers Conference on June 9th, 2025. The drop in stock price came as investors weighed the company's new announcements against high expectations, especially in the artificial intelligence space. Apple opened trading at 204.34, but soon began losing after basically the conference. So why the big drop? So the stock market reaction appeared tied to Apple's long-awaited moves in artificial intelligence, which many viewed as too little too late. During the keynote, Apple introduced Apple Intelligence, a suite of AI features powered by new enhancements to Siri and app automation. However, early impressions suggested the upgrades didn't go far enough to match what rivals like Google and Microsoft have already rolled out. So one of the big criticisms on Apple thus far has been that, hey, look, Google and Microsoft are way ahead of the game when it comes to AI, and Apple just has not been keeping up. And basically, based off the reaction from the stock after, they had this conference, it seems like those fears have been confirmed. Taking a look at the chart for Apple here, a huge, important level, I would say, is really that 200 level. And if you take a look here, it's below the 200-day moving average. It's below the 50. It's been toying with the 20, kind of, smashed up right against it, kind of flirting with it over the past week. And then today, on Wednesday, we basically got a drop below that 200 level. We actually closed at 198.78. So kind of sold off with the rest of the market there. But the interesting thing to me about Apple is that this is a company that used to run in tandem with the stock market. You would assume the Magnificent Seven in general, right? If the market's up, they're going to be up. If the market's down, they're going to be down. But the interesting thing, if you take a look at Apple here, the market's been going up, right? We can take a look at the S&P 500 here, and it's been clearly going up, right, over the past, month. And if you take a look at Apple, it has not. It's actually been going down. I mean, taking a look at this 3-year weekly chart here, it looks like you have this giant bear flag is what I would call this, kind of setting up here, not looking great. It's kind of interesting to me that Apple used to run with the market, and of late it's kind of separated from it. It's not, running with it. When the market's up, that doesn't guarantee that Apple's going to be up. So I have a bearish position on this right now. I do have some puts for the 195 strike that expire on the 20th of June. And the fact that we closed below 200 today, I just think kind of signals, hey, look, I think there's going to be more downside here. Would love to get your thoughts on that, though. Let me know what you think about Apple. What do you think about their conference? Do you think that they are behind the A-ball, so to speak, when it comes to, AI developments and keeping up with Microsoft and Google? So moving on. So we also did get a CPI print that came out on Wednesday morning, and it was softer than expected, which is a good thing. So taking a look here, according to Yahoo Finance, May CPI inflation pressures ease on a monthly basis as tariff uncertainty lingers. May's Consumer Price Index, CPI, report showed inflation pressures eased on a monthly basis despite investor concerns that President Trump's tariffs would accelerate the pace of price increases. The latest data from the Bureau of Labor Statistics showed that the Consumer Price Index increased 0.1% month over month, below April's 0.2% rise and lower than economists' estimates of a 0.2% monthly gain in prices. So it came in softer, which is great to see compared to April. On a core basis, which excludes volatile food and energy costs, CPI rose 2.8% over the past year in May. So if we actually look here from investing.com at how CPI actually came out on Wednesday, the overall, right, we were looking at 2.8. The core CPI year over year, 2.9 is actually what came in. So a slight uptick there. But I think the reason the market initially responded well to this is because we are kind of looking at a softer print than expected, especially looking month over month, right? Month over month, it wasn't as bad as what, was expected there. And really, when we talk about the impact of tariffs, when we talk about, some of the costs that, these various companies may or may not be passing down to consumers, you would expect that to show up in inflation. And so far, it is not showing up. And so, it's good for now, but eventually I think those costs are definitely going to come in. So declines in car and apparel prices, categories expected to show some of the earliest impacts from tariffs, helped drive a cooler than expected core CPI reading last month. So we had CPI. Let's take a look at the rest of the economic data coming out. For Thursday, we get PPI coming out 8:30 a.m. It's going to be another important gauge here. This is the producer price index. So we want to see if this is also going to be softer than expected, or if this is going to come in, a little hotter. So definitely pay attention to that. And then also we get a 30-year bond auction coming out today at 2 p.m., I believe. That's going to be really important. If you recall last month when we had the bond auction, it did not go well and stocks reacted negatively to that. So definitely have that on your radar. And that's about it. As far as the rest of the week, not a whole lot going on there. And yeah, as far as what the schedule is going to look like here for Stonkcast, I do have a very, very special interview lined up for you folks. That'll be coming this weekend. I'm going to be interviewing a very seasoned trader with more than a decade of experience. So definitely make sure to have your alerts on for that. Also keep in mind, I'm going to be dropping the next part of the Disciplined Trader mini-series that we're doing. If you haven't seen part 1 and 2, make sure to check those out. Those are already posted, but part 3 will be coming out this weekend. And then as always, I'll be back on Sunday for a market prep for the week ahead. But let's see how we can finish out the second week of June. Overall, the market is up. We had a bit of a pullback on Wednesday. Let's see what the rest of the week looks like. Thanks as always for watching. Thanks as always for the support. Make sure to like, subscribe, follow wherever you listen to podcasts. And folks, remember, plan the trade and trade the plan. Have a good one.